What's up YouTube, it's Louis here bringing you today's cryptocurrency video on Matic. And look at this monthly chart, guys. It's absolutely ridiculous, isn't it? So bullish long term. And look at that for the monthly close, the highest ever monthly close, and that was at $2.52. Made a new all-time high as well at $2.92, and we've just opened the month, of course, at about $2.52, $2.53. So the monthly is of course good for continuation because it's as well above the 12 EMA. Now if we go to the weekly time frame, yeah, it just looks so good, isn't it? Whenever you come to the 20, basically guys, on the weekly time frame you can come to the 55 weekly EMA, and as long as you're above that, you're in a bull market. And you haven't even been closing, look at here, for the past, since November, you haven't been closing below this 12. Yes, you've had some tests of the 20, but it just can't seem to get pushed below that 12. We're in continuation of a bull market. We're even holding the weekly 20. Look at the bounces off of it here. Bullish hammer, another, well, just a massive green candle. If it had larger wicks to the downside, I will say bullish hammer. See, when you lost it here, bullish hammer got above. It literally loves the EMAs, the 12 and the 20. So as long as you're above both, you're good. If you lose the 20, you come to the 55. Hope that's easy to understand. So I know it's a bit messy, but we had this falling wedge we've been talking about a rising wedge, sorry, we've been talking about for a while. And in the last update, we were saying as long as we're above this golden pocket, we are going to $3.31. That is our technical target out of this fib retracement over here, this dip from swing high to swing low. As long as you're above this golden pocket, we're going there basically. But we have shown you in the previous video as well that we could potentially go down as well to the golden pocket as a technical target. We have this swing high to the swing low. Let me go to the 4 hour now to show you a bit better. So you have the swing low to swing high. And once we lose that 1 point, because we have created the reverse wave, you came to the 618 over here. This is your 618. You bounced off, amazing, ran into the bearish cross and lost support. So that means you come to the 786. But as long as you can now come back up to the 618 and get above that, then there's an opportunity to invalidate the reversal wave, basically get back above the 618 and continue up. But here you got rejected, and so we always say this: once you get rejected from the 618 again, or lose it and then reject it, then you're going to lose 786 and come to the 1 minimal. And you came to the 1 and you haven't actually lost the 1. And this is something that we always talk about in my YouTube videos. We say that when you come to the 1 and bounce off of it, you can potentially create a massive double bottom. And we're going to go through a bit more detail about what's going on over here, because it looks like some crazy consolidation, doesn't it? I'm going to get rid of the 12 EMA. We can see on the 4 hour, we actually haven't formed the bearish cross yet. So if the bearish cross comes, I'm going to give you some technical targets. Of course, the 1618 is sitting here at $2.16, but I like where the 200 EMA is sitting at, the 1.272 at $2.30. So if we were to fall, maybe get a bounce off here, get back above and be good for continuation. But we've already gone through reasons why we could come to here in previous videos, because of course you lose the 1, this is your technical target. And yeah, as long as you're above this basically and this, we're good for $3.30, as we know. So we'll just look out for that. But some people, so I was thinking this is a double bottom basically. If that is your neckline, then I can give you a technical target to the upside, because we now have a new low. I can go from here. Yeah, that's exactly right. Perfect. So your technical target would be $3.34 at the 1618, which is beautiful. But we need to go through the bearish case. And of course, we know if we lose the 1, we're already doing that. But we do have this potential head and shoulders over here. So I'm going to draw the neckline, which is actually this. Can you see? I was thinking about drawing it downwards like that through this point and this point, or just horizontal, but there's more touches of support over here. Can you see that? Multiple touches of support. So this is why I've drawn this neckline for it. But this is your right shoulder, so I'm going to get rid of that now. And then I will give you a technical target for that if we do break this support level over here. So it's ascending. So if we broke out right now, which we could because we're coming into an apex, if the EMAs do the bearish cross, then we'll obviously go down. If they do the EMA repel, we'll shoot up and we'll go through some targets to the upside as well. So I'm going to measure from here all the way down to here. Break the neckline, and you have a technical target at the 1618, just below it, but that's still above that golden pocket. So you could afford to go down there, but of course we don't really want to, just because it's a target as well. First of all, it's not in play, so it doesn't have to. You can see you've had multiple fake outs. So over here, when you fell out, it was validated, then you invalidated when you came to support, and then you validated it when you lost support. But it doesn't like losing that one, and you keep getting back above $2.42, so to $2.45. So there's an area of demand basically over here that it likes to bounce from. So this is what can save us. It's done that on multiple occasions actually, because you have had wick rejections from this area. So this could actually mean that because we haven't had the bearish cross, sorry, we can obviously go up, but we know if we lose this, we can actually bounce off the one again and get back above. That would invalidate it further downside. But if you lose the 1618 is your technical target, and you could have a wick down to there before continuing up. We'll go through some more cases, bullish and bearish right now. So of course I don't want the bearish cross, of course. No one does. What the hell's happened here? Hopefully it's saved everything. Perfect. Yeah, so what is going on over here? Nasty range, but I think this is some sort of diamond pattern, to be honest. That's what I think I'm seeing, and I'll get you some targets out of that. Yeah, so this would be support as well. So you're really coming into the apex now, and that's why we're going to get either an EMA repel or a bearish cross, sorry. So a big move to the downside or big move to the upside is coming. But it's also dependent on Bitcoin as well. So go check out that Bitcoin update from earlier today. It's always the first video that I post. I try to post anyway. So here's your diamond pattern. You fallen out of it, got back in, went to the top, went to the bottom. So with the pattern, you measure from the top to the bottom. We use the bodies, and then on the breakout. So if we broke out up here above the EMAs, then we would have a technical target sitting at $2.74. Is that anything? Not at the moment. Let me get some more fibs. But in the meantime, before that, if we break to the downside, you're coming to that 1.272, which is some confluence, because early in the video I did say we could hold that 200 EMA, so that would be a nice bounce. Of course, if we lose that, we're coming to that 1618, that head and shoulders pattern's target. But you could fall out the diamond pattern, meet this target, and then bounce back. That could be a potential possibility as well. So we'll see what's going on. We have to watch the space right now. But we, of course, want the bullish breakout. So I'm going to get you some more fibs now, because for here, I was measuring a retracement. I wanted it to bounce off that 618 and continue up. But you've now created a reversal wave. So if you were to lose the one, that's why we're going down. So I'm going to get the fibs for the opposite way now, from the swing high to the swing low. Potentially, this is the bottom, because we've been printing higher lows and higher highs ever since. Since this higher low, we've been waiting for this higher high, and this technical target would be a nice higher high for us to fall back to key levels of support, like here or here, basically, for continuation. So if we can now get to that 0618, which could happen with this pump, because the technical target is there. And so if you were to get above there, of course we probably are going to roll over, find support here or here, and then get back above that eventually. But as long as you can eventually get above this, and we'll draw it in now, this golden pocket right here, as long as we can eventually get above this golden pocket, it doesn't matter if we get rejected like we have there, come down, started making higher lows, maybe even reject it again. But as long as we can keep printing higher lows, we should make a higher high. And as long as we can hold the 0618, you have a minimal target at the 1. And we know that's also a double bottom here with that target at the 1618, $3.34, this larger 1618. But out of the little fib retracement over here, measuring the small dip that we've had, then if we were to break above the 618 at $2.71, we would go to the 1618, which is also lining up with the larger 1618, as well as the double bottoms technical target, this double bottom over here. So guys, I hope you enjoyed today's update. I enjoyed making it for you. I wish you guys all a happy new year. Please like the video, please subscribe. I'm trying to get to 1.5k subscribers within the next 2 months, by the end of February. So if you enjoyed this video, smash the subscribe button, smash the like button, and comment what you think is going to happen to Polygon next. I'm interested and will reply to everyone.